Good morning, this is Ken Long from Tortoise Capital with a review of the weekend trading report for May 21st, 2016. Market remains in bullish normal by 0.5%. On an annual basis with weekly RSI 14, we're in the middle of neutral at 55 out of 100. Middle of neutral on the 10-day index at 47 out of 100. Looking at the market mosaic, price with respect to the 200-day moving average is 2.91% white bullish. Slope of the 50 has declined to white bullish at 0.29%. ADX is a non-trending 13.9. The risk index is the 30-period moving average of the VIX divided by the 10. 1.0 is the threshold between risk on and risk off. That reading right now is at 0.969, so we are into risk off. Take that score and look at the last 5,000 trading days. Find the average and standard deviation and compute the risk Z, which is at minus 0.44. It means we're 0.44 standard deviations below the long-term average. You see a 90-day histogram of that indicator here. And with it rolling over and the threat of increased volatility around the corner, we shorten up our time horizon and emphasize more of the day trades than swing trades, looking for a volatility spike here in the near term. These are the holdings of blended monthly rebalancing for the different model portfolios, and then the current leaders in those portfolios based on the prices as of Friday. In ETF2, the model remains at 100% invested, and the model portfolio is also at 100% invested. Everything in the ETF 13 and 32 portfolios are above their 4-month moving average for the blended monthly rebalancing look, so they're all on buy signals with the exception of China down here. You can see this was a week for just about everything given back gains, so it was a global phenomenon. And unsurprisingly, the leaders are quite often the ones who give back the most, Latin America and real estate in this case. ETF Max is about 1,000 of the most liquid ETFs, and looking through the BMR lens at them, again you see the longer term leaders are the ones that are given back the most, as profits are preserved, money perhaps being reallocated to other asset areas. We'll be looking at these as opportunities to buy quality on sale, or to look to exploit that momentum on the short side with the intraday trades to begin with. In the S&P 500, same lens. Marathon Oil, Newfield Exploration Company in the green with some momentum. Range Resources looking interesting. NVIDIA in the tech sector space. Applied Materials with a big move this week. Puts it into the green for the month. Brings it near the top. In the market health check, the steady slide from the swing high up here at 211. We've been talking about that now for 3 weeks. We talked about it with the potential for this. Only one little rebound here. Now, what makes it interesting at this support level here, at the bottom of the river last time there was about a 3 or 4% bump. We've seen a doji in the first day of momentum, so we'll see if Monday brings some more momentum. About 3.5% off the swing high, still 12 or 13% off the swing low from back here. River has rolled to a flat condition. The dragon has rolled over. 10-period regression channel is tight and sloping downward. The 30 sloping downward. Jaws at PPO are open to the downside. So, and with only 0.5% off the sideways market indicator here, the market is really at an important turning point. Last time there was only this little rebound. We'll see what we get here on this support level. If 203 fails to hold, then the next target's a 200-day moving average followed by 197, which puts the last 60 days of gains back to zero. So this is an important market moment. ETF2 lens, looking at the top 10, all are on a buy signal, leaving us at 100% invested, 0% cash. The S&P at 25, slightly better than EFA at 23. Inside the U.S., it's the mid caps, small caps, large caps, then tech. Two strongest sectors, U.S. mids and Latin America. Two weakest sectors, European 350 and U.S. tech. Oil continuing to rebound here. U.S. is a mixed bag right around the average line. China, Taiwan, and Indonesia especially weak in Asia. Everything else below average with a few notable exceptions. Brazil still in the green. Latin America has pulled back into the white. The ETF top 30 are reflecting the same winners and losers as the BMR lens. Especially noteworthy, the crude oil, green and red is an unusual condition. USO in the same. And so we'll be looking for some continued momentum there, or the profit preservation if that starts sliding. If it's white and green, then those are things that used to be at the top for consistency, but are now sliding back to just above average. So that's going to be Russia, Latin America, Alcoa, more Russia, some more natural resources. So we may be seeing some topping action here in the basic materials sectors. Among the Dow, only Chevron in the green at the top. We've got four in the red down here at the bottom: Disney, Microsoft, Apple, and Nike. Certainly I'm interested in all four of those as a value player. Big sell-off here in Caterpillar, yellow then green. Again, that's part of that cycling out of materials. ETF liquidity, just for reference. Shifting to the daily, lots of channeling and overreactions in place. You got some 5DD candidates, 551W candidates, and then plenty in the auto framer because basically the market has pulled back from its 10-day high sufficiently to support trade framing. Lots of good frog quality numbers. That's not unusual with the declining volatility, and also some potential large range days. Lots in the auto framer to choose from. ETF 30 showing the same kinds of conditions with lots of good frog quality numbers and auto framers and channeling and overreactions. Quite a few dojis also from Friday. Here's the key price levels for the ones that meet at least the 2-to-1 criteria in the auto framer. And lots of good ones to choose from in the regression line fractal. The top shelf in the green are the deep value plays, the ones that are the most ATRs below their RL270. You see Nike, Microsoft, McDonald's, Coke. And then the bottom shelf in the red here, the most above their the most numbers of their own ATRs above their RL270. So these are going to be the relative strength leaders. And finally, for choices, daily squeezes. These are ones where if we just play an entry above yesterday's high with a stop below yesterday's low, and then play for a test of the 10-day high, this is what you get on that kind of trade frame. Correction, not 10-day high. If they just move a one-day range stat, that's the reward to risk ratio. Sorry about that. So we'll be looking at Amazon, Apple, Devon Energy, Win is on that list. We like that. We like to trade that. 30-period regression line is sloping downward, as you can see. We've pulled all the way back from this high to now below the 6-month average. in that time, the market has really just chopped sideways and been sliding downward. Just for some reference here. Looking at the z-scores of 3 regression lines, the 90 has peaked and rolled over at a +2 SD. The 30 has pulled off that peak and is now below that average, as we've seen. And the 10 has rolled over. This is a good place for a swing to find support. Now, even in this sideways chop over here, there were some sharp short moves before that final collapse. And even when it found support over here, there was a nice move. So we'll be ready for a test of the upper channel again and the swing high, but also prepared to capitalize on these kinds of collapses. That's everything from the daily and weekend report. This is Ken Long at Tortoise Capital. Keep your risk measured and your powder dry.